I went and looked. The first time we did this, do you know how long ago it was?
Has it been 5 years?
7.
Oh, goodness. I knew I was in the other office, so I knew it had to be like 5-ish.
That's what I was
Long
thinking too.
time,
I was
yeah.
sure it was like 5 years. And I went back through and I found the picture and it was April of 2017.
And I'm trying to think of what the situation was and what we talked about. I
I think
remember.
all we talked about was the types of loans that you offered
Okay.
and just kind of what was on the market at that point. So there wasn't a whole lot that we actually...
Better than now. Better than now.
It was like, well, yeah, because back then it used to be anywhere between 80 and 120 homes on the MLS at any time.
Yep.
And like we were talking before, there's 32 in Douglas right now, just residential homes.
From what's the price range on there? What's the majority of them in the price range?
It's really screwy because a lot of them are lumped in between 200 and 300. Then there's a bunch, there's a new construction that just came on over in along the river by Keith Ryder Park.
Okay.
And it is $550 for a 3-bedroom, 2-bath. I mean, the price
Right
is...
on the water?
No.
No.
You can see it. It's one of the last lots before the bike path that runs there.
Okay.
But it's not on the water. So, but yeah, $550, and it's Ashby Construction out of Casper that's doing that one. But it's anything under 200 right now requires a lot of work.
Yeah.
And there's nothing really 2 or 3 bedroom anymore. So finding a starter home is
very difficult. Because even the townhomes over on Meadow Lane are over 200, aren't
yeah. they? And those were, back when we first started, those were like 167 when we started doing this. I mean, it's changed so much.
So that shows you the inflation in the last 7 years is 20%.
Yeah. And then you look at, I mean, interest rates were a big thing last year, obviously. Yeah. Everything went up. Did you see a lot of issues with that, with people coming in and then deciding to... Did they decide to buy or did they decide to wait because of the higher interest rates?
I think there's a lot of people waiting because of interest rates, which is a concern for me because in my personal opinion, I see rates falling some, but I don't see them falling substantially. And I think that homes will continue to appreciate.
Well, that's what I keep seeing too. Is oh, well, I'm going to wait till they... Well, no, because then when the interest rates come down, then the prices of the homes start going up because all of a sudden now there's more buyers wanting to look at purchasing and there's less inventory. So then everything just keeps this cycle of...
Yep. And I keep saying, if you buy at a little bit higher interest rate and current market prices, you can always refinance when rates go down. If you buy at a slightly lower rate and a higher price, you can't.
Yeah.
Like it is what it is. You have no room there.
There's no wiggle room there.
There's no wiggle room, yep.
Yeah, just appreciation alone will get you that equity so then you can do the refi at a later date.
Yep.
But now, did I see you are doing, you can loan anywhere?
Yes, I can loan in all 50 states.
Nice.
And I actually have a ton of broker options right now. So like debt service coverage ratios, if you're an investor and you're looking to buy an investment property, but you're looking for some sort of non-conventional financing.
Right.
Debt service coverage ratio loans are more on, does the mortgage payment, can the mortgage payment be supported with the rent on the home? So the qualification's a little bit easier. It's a great program for investors. So I have a ton of different options. Self-employed people, we have a lot of options for like bank statement programs. So you're looking at actual deposits for income instead of tax returns.
Oh, really?
Yeah. So there are a ton of broker programs out there that I have access to now also.
I had that issue, it was probably a couple of years ago, but they were looking to buy a home and the business made good money, but because she's self-employed, she never wrote herself a check.
Yep.
And so finding financing was really difficult for them.
Yep.
So you would be able to.
I have a lot of out-of-the-box programs right now. Now, obviously, a lot of those programs, credit score is probably going to be a little bit higher, down payment might be a little bit higher, but they're options, and it's a great thing to get into. Once again, you can always refinance out of it when you're in a position that your tax returns support that. So.
Right. What did you see last year? I mean, last year compared to the previous year, do you think it was busier around, or did it really slow when all those rates started going up?
It really, really slowed.
You know how many homes sold in Douglas last year?
How many?
107.
And how is that compared to the previous
I have to go back further to look, because I was in a rush, but I was like, that still seems like a lot.
It does, but I wonder how many of those were prior to August.
May, June, right when things started to really go up. But that was really weird, is I was more focused on like the video and photo stuff that I do.
Yeah.
So I sold like 1 or 2 the first 6 months, but then all of a sudden August hit and I sold 3 within 2 months.
Yeah.
And I was like,
there was like a weird time, like end of third quarter, beginning of fourth quarter last year, that there was an odd pickup. It
right
seems
there.
like, yeah.
And it was just really weird, because then you go back, it went from like 34.9 was the lowest property. So it was a single wide trailer over in Lone Tree.
Okay.
But it went all the way up to 935,000.
Huge gap.
And then, like I said, this year, I mean, we've got a home on the market that's over 2 right now that are over $1 million. And you're just seeing that inflation just kind of, prices just keep going up.
Yeah.
And
I was just at a conference, and I don't have it in front of me, but it was 8 of the main Realtor.com, Zillow, Fannie, Freddie, MBA. I can't remember what all of them were, but there were 8 of them that were trying to estimate what home values would do, and 7 of the 8 think that homes will continue to appreciate this year. There was only 1, and I can't remember what the one was, but the other 7, I think it averaged out to like 5 to 7% appreciation is what they're estimating this year in home prices.
it's just so weird. I mean, I grew up at Douglas, and I went away for a few years for college, but I've been back. But to see the homes and be like, I just had somebody ask me, they were making an offer, and I mean, it was a good offer that they were making. And he asked me, he said, honestly, am I overpaying for this property? And I had to stop and look at him, and I said, yes, you think you are. I think you are, based off of what these used to sell for. I said, but in today's market, you're not.
It supports it, yeah.
There are the comps to back it up. Mm-hmm. And I mean, I told him, I said, you're not going to get hurt because the neighbor's property sold for this, and it's the exact same thing as what you've got, mm-hmm. or we're trying to purchase. I said, so you're not going to get hurt, but I know, because he had lived here for a long time too, and he hadn't bought in probably 5 or 6 years. I was like, I understand why you feel like you're overpaying, but the market has just changed so much that you're not.
When I started 20 years ago, I can't tell you for sure, but I remember WCDA purchase price limits being like 114,000 or somewhat close to that. And that was 20 years ago. Can you even buy a house for 114,000 right now?
A new construction single wide in Lone Tree. They're 86 to 92. Mm-hmm. So it's like.
And I was doing a number of WCDA loans mm-hmm. for first-time home buyers under that purchase price amount. And I was thinking about that the other day, and it's like, that is crazy because you can't even purchase for that right now.
No, I mean, just starter homes, 3-bedroom, 2-bath. I mean, it's crazy what they've jumped to. Mm-hmm. And then they just keep selling. So that's when people are like, oh, I'm just going to wait. It's just,
Yeah, don't wait.
don't wait because
do
it's
it
not going to
now.
change, at least not anytime
Yep.
in the near future.
Yeah. Well, and historically, real estate's always a good investment. As long as you can hold on to real estate through any downtimes that might come, real estate is historically always a great investment. Always.
Well, that's what Mom and Dad used to say. Well, you know, we always averaged this much appreciation, and Douglas always kind of held its own, regardless of what was going on everywhere else. I mean, during COVID, that 3 months of lockdown where we're not supposed to be doing anything, I showed more property during that 3 months than I did the previous 6.
Uh-huh.
I was like, what is this?
Yep.
This is screwy.
And that's when we had people moving in from unusual locations because they were working remotely.
Yeah.
They wanted to come to Wyoming and get out of the hustle and bustle.
And you're 30 minutes, well, 35, depending on how fast you drive, to Casper.
Yep.
And 3 hours to Denver. I mean,
What about
a good-
cash sales? What have we seen for cash sales lately?
I haven't watched them a whole lot. It seems screwy. There was a nice property. They had completely remodeled this home. I'd sold them the lot. They had a home. They added a shop. But it was one of those deals where traditional financing just wouldn't qualify on the property. And I gave him an opinion. I said, you know, this is just going to be a hard one to sell because not everybody's going to qualify for this. So when you start limiting the pool, then might take a little longer. And it went on the market for like $198,000. It sold, and it was a cash sale. But 2.5 acres out in the country.
Yep.
And it's just, I know it's happening very much in Casper, where people are moving in, and there was a sale. It was a realtor friend of mine. He sold a house, and I'm going to lose track of the time. It was probably right after COVID, and they paid for the house with Bitcoin.
That's crazy to me.
Yeah, they set up a wallet.
Yep.
The title office did the transaction, and these people were coming from out of state, and boom, Bitcoin, sold the house. And then I've got another broker friend in Denver, and I went down and had filmed this house for him. It was beautiful, but it was only a 2-bedroom, 2-bath, 2.5 bath on the main floor, and then a partially unfinished basement, and it was in the Highlands Ranch area. And it was $850.
And they bought it with Bitcoin.
No, they paid cash. Somebody can't. He's like, I don't understand he said, this one's going to be a little bit of a tough sale, but somebody from out of state bought it so that when they visited Denver, they had a house. I mean, so
Awesome.
well, great for him
Yeah.
and those sellers, but that's something that I think we're seeing a little bit more of coming this
I
way
do
that
too.
we're
I do
not
too.
used to. So it's just really interesting.
I also think there's a housing shortage across the U.S., obviously, but I think other places have one up on us because they're building. They're trying to bridge that gap with new construction, and we just don't have that going on here.
Well, and that's also too, though, like the new one they're building it for $550,000. So how do you fill that gap when they're seeing what they could get for a home versus?
Yes.
So that's really
Building a $250,000 house and shrinking their
profits and the margins.
Yeah.
But I mean, it's a really weird time right now, and I think everybody's kind of waiting. But what are you seeing most of your buyers that you're helping? Are they going rural development? Are they going conventional, FHA?
Obviously, first-time home buyer type people, WCDA, and that's because their rates are so good. I mean, WCDA rates are about 1% under market rate right now.
Really?
Maybe not quite 1%, but
Right.
WCDA rates, they have done a great job of holding rates down. So that's where everybody's trying to go if they can qualify for that program. If they're not first-time home buyers, honestly, I do a ton of FHA for a number of reasons. FHA will allow lower credit scores than conventional will. FHA will also allow higher debt to income than conventional will. So FHA, I can get more people into than I can get conventional financing. And also FHA only need a 3.5% down payment. Now conventional, there's a 3% program, 5% program, but typically, you know, if you're going conventional and you can put the 20% down and get out of mortgage insurance, that's definitely the route to take. But FHA, you can usually put, 3.5% down and have higher debt, lower credit score.
Well, that's a great option for people. I mean, opens it up to more people.
Yes, it just opens it up to more
every day, just trying to get into
boots
their
on the ground type people. There's not a ton of liquid cash right now. I feel like, so any program that you can get somebody into, and like I said, rates are higher than people would like to see. But again, if you look at historical rates are still low.
Everybody just got so used to everything being so easy and so low. I think that's and everything is so instant, like we were talking earlier. Everybody's on their phone. Everybody can just do everything right from their phone. And so they're used to being able to just, I'm going to make this switch. Which
in part is frustrating on the loan side of it, because you look at these online lenders, there are lenders that do a great job of marketing. A lot of it's illegal marketing, but they do a great job of marketing, and they're posting rates, and then people are calling, and I can't touch the rates that they're seeing online, but they don't know the fees associated with those rates. And sometimes you get into it on those online things and it's not incredibly legit, or it's you don't qualify for this rate because of this, or you're paying, $15,000 fees to get those rates.
Because they're just buying down.
Yes. Yeah, they're paying for the rate. I mean, what rate do you want? Do you want me to quote you that rate? I can quote it for you. It's going to cost you, though. And the marketing, some lenders do a great job of the hook. They hook you in. And like I said, a lot of it is illegal marketing because they're not disclosing everything they should be disclosing.
Well, yeah. And that I had a client 2 years ago. It was an out-of-state lender, and he'd hooked up with them before he started looking. And then all of a sudden we started going through the purchase process, and, you need to put more down. We need more of this. We need more of that. And he just kept having to jump through all these, and he was getting extremely frustrated, but then so is the seller, because everything just keeps getting delayed. So that's why I always like sending somebody to somebody they can come and sit down, look you in the eye, and have a conversation.
I always recommend like local, so you can insurance, title company, realtors, lenders, like check with your local people, because you have somebody you can go sit and visit with.
And it just makes the whole process so much easier, because you're here, you know the market, you know what's going on, and so you can give very sound advice and information on what's happening here for people. And that's worth all of it for me.
Well, let's be honest, we have a great tight-knit community, and we're the people spending money in our community. We live here, work here, spend money here. And we want the best for our community. Well,
and it's just, I think it just comes back to that everything's online and
Yeah.
they see and they click. So
Yep.
that's kind of why I was figured, well, let's start doing this again. And so
Yeah.
that way put faces in front of people that are local. So that way if somebody's watching it, if anybody does,
Yeah.
who knows? They'll be like, oh, okay, I've seen her at the store.
Yes.
I've seen it. So they can recognize there are solutions locally
Mm-hmm.
that will help people. And I mean, it's a big deal. It's a lot of money.
It is. Well, and I think the other thing, well, I pride myself on at least, is if somebody applies for a loan, I don't say, okay, here, information input, information output, here's the loan. Like, okay, here are your options. You
Right.
there are pros and cons to these 3 different mortgage types or these 3 programs, and here's the pros and cons, pros and cons, pros and cons, because I don't know what's best for somebody, because I don't know, what their long-term goals are. I don't know what their short-term goals are, and those are the things that lenders should be finding out, and they shouldn't just be inputting, outputting. Like, here are your options. You tell me what fits best to your life. Now, that's not always the case. Sometimes it's like, this is what you qualify, this is what we can do for you, but that's not always the case. And
Right.
the consumer should have the option to be able to make a good, educated decision for what's best in their situation, because it's not the same for everybody.
No, I had somebody, they were looking at purchasing a property out on Chalk Buttes, but the home had been built prior to 78, so it didn't qualify for financing, but it had the acreage that they loved. They could walk through and see potential for making it what they wanted. It was their first home.
Mm.
I mean, we're talking first purchase, new jobs, new city. And I told him, I was like, well, if I talk so-and-so, I think I can swing the money. I was like, don't,
Mm-hmm.
because who knows what life's got
Yeah.
in store for you. And this is a first-time home. You may find somebody to buy it, but it could be years down the road. So just giving somebody all of those options
Yeah.
and that information is the best way.
And if they decide, as long as they have all the information
Right.
in front of them, if they decide to do it, you've at least educated them.
Yeah. And I think that's the biggest thing when doing anything, obviously, but especially with real estate and making such a big purchase
Yeah.
for such a long period of time. I mean, obviously you can always sell, but
Yeah.
depending on where you get in, what type of loan, things will change. And I've had many clients call and say, oh, well, I think I'm going to take a job in Casper. I can rent my home, right? And I'm like, call your lender.
Yeah. Depends what kind of loan program you got, because some programs you can't.
Yeah. But when they're looking at the process, if somebody's mentioned that to me, I'm like, okay, well, before you do this,
Yep.
call Angie, see what she says. Can you do this with this loan or can you
Yeah.
not? Because that could influence the type of property that they try to buy.
Yes. And that is one thing, like, if you know that's their long-term intent is, I want to live here for a few years, I want to move up, I want to start building an investment profile. You don't want to put them into a loan like WCDA because you can't, you have to occupy the property. You
Right.
can't have that loan type if you don't occupy the property. So it's important to know what you're doing.
Well, it's just like you were talking, the online lenders, I see all those TikToks on, you're scrolling,
Yeah.
house hacking, buy this, buy that. Well, yes, it's a great theory. There's a lot of detail that goes into that. And you have to talk with your lender to make sure that if this is what you're doing, these are the programs that you need to
Yeah.
capitalize on.
And the average consumer doesn't know the questions they should be asking, and rightfully so. I mean, how many times do you buy a home? You don't buy a home enough to be familiar with the process, or most people don't. So you're relying on your lender to give you that information, because to some extent, you don't even know the questions to ask.
Right. Well, and that's what it always cracks me up when somebody calls, oh, hey, I want to go see this house. I say, oh, cool. Have you talked to a lender?
Yep.
Can you buy the house?
Yep.
do you have any idea what's going to go into this? I mean, it's a big commitment, and there's, like you said, education is key to make sure that they understand everything that they're getting into, the options that are available to them. Or, like you say, sometimes there are options, but sometimes you only fit for this one. So,
well, and as a realtor, that's probably one of the worst things in the world, is have somebody fall in love with a house that they don't qualify for. Then they're never gonna, there's never gonna be another house that compares to the one they fell in love with at the price range that they qualify for. So that's probably one of your worst fears. Hey, make sure you're pre-approved and you know what you can be looking for, because you don't want to fall in. I don't want you to fall in love with. You don't want to fall in love with a house that you can't qualify for.
Right, and it's a simple deal. All they have to do is give you a call, and it's 10, 15 minutes on the phone?
Yeah, it's, a short time on the phone. You can probably fill out the online application in 5 minutes, and assuming it's a straightforward deal, straightforward income, a pre-approval can be done very, very quickly. I can have a pre-approval out in 20, 30 minutes. Now, there's always the exceptions. If you have a lot of overtime, or you have, we have to verify more income stuff, it could take a little bit longer.
Right. But you could give them that idea.
Oh, absolutely.
No, you can't go look at 40 acres and
or you need
arena.
You need to pump the brakes, and let's get this documentation. Let's make sure we know where you're at. So you either need to pump brakes, or you can be like, okay, you have the total green light. Just get to shopping. You're ready to make an offer, and you want to be ready to make an offer when you look at that property.
Well, and it's great when people work with a lender that, as a realtor, I can call and say, okay, they've found one. This is the property. They'll get a hold of you, and then, we can have that conversation. So that way, I, as the realtor, make sure that you're getting all the documentation that you need from me or them in order to get that process started. Because how long is it taking right now for underwriting and all of the
things aren't as busy as they have been, so underwriting is fairly quick right now, 2-3 days, but
it's not too bad.
Yeah. So no, turn times are pretty quick right now. Appraisals aren't taking super long. We're kind of in a different situation just because we don't have local appraisals, so appraisers, so they're coming in from out of town. So you hit them while they're here. Lot faster than if you have to wait till they come to Douglas next, but
come back again.
Yeah. But no, the process it's not a long drawn out process right now by any means.
Well, it's just all back to that. It's simple to go and get all the information you need before you start doing the process, if you know who to talk to.
Yes.
And that's, like I said, you're here in town, you know the market. People can come sit down, visit with you, have a conversation, meet you down at Blend for a coffee or whatever.
Exactly. Well, and pre-approval, there's another thing to talk about, pre-approval letters. If you read a pre-approval letter, they're no better than the paper that they're written on. They give the lender every out possible. That's one thing I've prided myself on. I don't write a pre-approval letter if I haven't done my diligence. There's online places that you can go in, insert your information, it pulls your credit, it spits you out a pre-approval letter, which is great because they've looked at your credit and your credit qualifies, but they're also they're pre-approving you off the information the consumer put in. And I'm not even saying consumers are falsifying it, because most of the times they aren't. They just don't understand, overtime. There's certain qualifications to include overtime. Well, yeah, they really do make this money, but as a lender, we can't include the overtime because they don't have
it's not guaranteed.
A history of it. So they have this pre-approval letter. They think that they have the green light. The realtor thinks they have the green light. Everybody thinks they have the green light, and then they get it under contract and start providing documentation, and
all of a sudden it just
all of a
starts
sudden
to
there's an
crumble.
issue. And that's one thing I pride myself on. I don't write a pre-approval letter unless I've done my diligence. Not only I don't want the headache, I don't want to have those hard conversations. As a realtor, you don't want it. And as a borrower, you certainly don't want the false hope of, I have my dream house under contract and now I can't buy it because of all these technicalities. I'm very upfront with people. You know, we need this documentation, and we get the documentation, we look at the income, we look at everything so that they know when they're shopping, like, I truly do qualify.
This is my home.
This. I'm not going to run into issues.
No.
Now, with that being said, there's always things that come up, but I don't very often issue a pre-approval letter for something that ends up not closing, because that stresses me out too much. I don't want to give people false hope either.
The one I loved was, I was selling it for somebody, and we were helping them buy it, and underwriting came with something, and they needed distance on the well to the septic line.
Yes.
And they needed it. It wasn't there. They needed a letter. I mean, we just had to hire a plumber to go out and say, it is this many feet.
On FHA loans, the well and the septic have to be a certain distance apart.
And I was like, oh God, son of a bitch. We're so close to closing, and now we've got something else that we have to deal with. And my dad was just livid. He was pissed. And he picked
I can only imagine.
He picked up the phone and he called you and started yelling at you. And I was yelling at him. I was like, it's not her. It's rules and regs. She's just passing along. We have to provide this because they have to know 100% that it meets the guideline. And he didn't care, and he lit into you, and I felt so bad because I could hear him. And then I ran into you in the store like 20 minutes later, and all I said was, I'm so sorry. And all you just said was, it's just Dad.
Yeah.
I get it.
He did not hurt my feelings, and frankly, he usually had valid arguments, very valid arguments.
I was just like, it's not her fault.
But that's one of those cases too with experience. Like we only learn things the hard way. Mm-hmm. Like there are so many rules and so many regulations and all these caveats, and you don't know something until
it's like, oh, by the way.
Yeah. Well, now I'll tell you what. Every time I have an FHA loan on a manufactured home on a well and septic,
the plumber writes you a letter.
You should see the list that I emailed. These are the things that we need. We need an engineer certification on the foundation. We need the letter, the distance from the well and septic. We need a potable water test with E. coli, nitrates, nitrites, and bacteria, because same thing. We need a water test. You say you need a water test, and you get a potable water test, and then the underwriter, you find out, oh, it doesn't meet all the qualifications, so
you got to do it again.
And my list just add, and now every time, like, okay, up front, these are the things
and that's
we have to have.
And that's what makes my job easier too, because I'm familiar with it enough to know that there's stuff that needs done. But as you said, not all loans require that. Mm-hmm. So depending on the type of loan, sometimes you may just sit there and think, oh, well, we got the loan. Oh, well, they didn't ask for it. They don't need it. Yeah. Or it's a case of that lender not taking the initiative at the front, saying, here's what we need.
Or knowing, if you know,
or just not knowing it yet.
If you're an online lender out of California, you and I know when we see this address, I better make sure Chalk Buttes. Is it Chalk Buttes that they're on a well? Or are they on city water? We know to ask those questions.
Yeah. Is this, I just ran into it, sold a lot out at Bill, and the title said, oh, we need the statement from the HOA that they've paid all their HOA fees. I was like, there's still HOA.
Yep.
Oh, well, we'll have to add that to the list of when we know these ones are defunct and not functioning. but that's where you get the local expertise to know those things. And it's just, it makes the whole process easier, especially with the buyer. Like you said, they're not familiar with it. They don't do it all the time.
Yep.
So when you hand them the list to them and the realtor, they're like, oh, okay. And it's not a, well, why didn't you tell me that before?
Yeah.
Because then that's when you start getting tension and a little bit, I mean,
It makes the transaction not run as
smoothly. Well, and my dad constantly said, there's no emotions in real estate. It's just numbers. Yes, and a big part no.
Yeah, I was gonna say I agree with your dad, and that would make things run a lot smoother and easier, and I wish I could separate that, but I don't have it.
You can't, and there's so many ups and downs and appraisals not meeting or repairs needing done, and I hate that part of getting through the objection deadline and getting all the repairs addressed, getting everything required that the lender needs, and then all of a sudden the appraiser comes back and says, we didn't have gutter extensions on the downspouts.
Yes.
You know, something trivial that is an easy fix, because we know that's an easy fix. But the buyer that's trying to plan a move and packing, and
it's stressful.
It's huge stressful. And even those little things, some people will be like, oh, okay, it's not a big deal. And others, they need to take a day or two to be like, oh, okay, it'll be time. It's fine. But, and all those, by you being able to provide all that information up front, like you said, it just makes everything go smoother. You don't end up with delays, which then stress everybody out. And
there's not surprises.
Yes.
If you can go in without the surprises, that makes it much better for everybody involved.
And it's crazy now, because I know you pretty much go to all your closings, so you're there with the buyer as they're doing everything. Have you run into the e-closings now with title offices? So
I haven't a ton, just because it's usually local people and I'm here, so I haven't a ton. But yeah, that whole, that's going to be a hard thing for me to get used to.
I sat with a client last October. He worked at the coal mines, and we sat in his living room at 10 o'clock at night on his laptop and sold his house. Did an e-sign. I was like, my dad and my grandpa would be flipping.
Oh, I was going to say, HR
would not trust
would have
it.
no part of that.
And it's funny, do you still run into the people that have to come in and physically sign to feel comfortable, or are they?
Less and less, but yes. Yeah, I just had one not too long ago. I mean, even documents. Even if I have people come into my office, almost everything's signed with e-signatures anymore. And I have had one recently, like, I don't want things emailed. I want to physically sign everything. And it's great because we can accommodate that.
Right. Well, and that's also, again, you're local and you're getting that face-to-face, and they're trusting you.
Yes.
And that helps build that rapport, being able to sit down with you. And
I always compare it as going to the doctor. I'm trusting as far as the medical side of it goes. I go to the doctor, they say, this is what's wrong with you. They prescribe me this. I go fill it at the pharmacy and I take it. I don't do my own research. Shame on me. I probably should, but I don't. And a lot of people are that way. And so I feel like our job's very, very important to make sure we're pointing people on the right path and giving them good advice and giving them correct information, because a lot of people aren't researching it on their own. They're trusting.
I had that happen with a client of mine. He was actually a lender, and I was selling his property for him. And I screwed up. I did the whole thing. I sent it to him. I said, here's your offer. I was in Denver, so I was reading it on my phone. I said, I'm in Denver, read it. It looks really good. And it was like a week before closing, all of a sudden we get the balance sheet. He's paying closing costs. And I was
Oh
like,
man.
what happened? And I went back and I looked, it was in the contract. It wasn't in the additional provisions, which is where I always put them. And a lot of the agents in town do. It had been put further up in the document.
Yes.
And I called him. I was like, you're paying these closing costs. I said, I screwed up. I said, I read it on my phone. That's my fault. But you didn't catch it? He actually said, I didn't read it. And he was a lender.
He just clicked sign.
He said, you said it looked okay. He said, I just checked the numbers at the top and then hit send. So I really slow down a lot now.
Yes.
And make sure I pull it up on a screen.
I was going to say, and it's harder when we're looking at things on our phone because you can't see the full page and you can't.
It gets interesting. So yeah, it's always nice when you can sit down and talk with somebody. So
yeah.
But yeah.
And have the hard copy page and go line item by line item. It's hard to do on the computer.
Well, like your documents, they're very long. So there's a lot of detail. So people need to be reading it and asking questions if they don't understand.
Yep.
And that's why they're coming to you for that expertise to, what does this mean if I agree to this? And
I actually, like when people ask me questions and it's like, oh my gosh, that's a great, I almost get excited. Like, that's a great question. Like you looked at things and you want to understand it. That's a great question. And I kind of get geeked about it.
No, that's awesome. So if anybody needs to get a hold of you for questions, what's best? Is it best to give you a call? I'm guilty. I hand out your cell phone number. Do you want them to give you a call, text, email, online application?
Whatever is most convenient for people. I am very, very flexible. I mean, I answer the phone the majority of the time. If I do not answer the phone, it's truly because I'm tied up. And if you leave a message, I guarantee you I will call you back. If you want instant answers, like if I'm in a training or, in a meeting or something, a lot of times I can text back if you want instant answers and I don't answer, shoot me a text. Chances are I'll answer you fairly quickly with that. I'm flexible. It doesn't matter to me.
And then what's your website for people to go find everything or fill out the online application?
Yep.
You can just send them the link after they call and talk to you, so that way you know.
Yeah.
Yeah.
Yeah, I can just send you the link for the online application via text, via email. My cards have a QR code that you can scan, so there are tons of options there.
It's crazy the way everything just has progressed, and now you've got QR codes on business cards. And it used to be, the paper. Because you've been doing lending for 20 years?
20 years. I started in 2003, so this will be my 21st year.
That's crazy.
Yep.
It doesn't seem like it was that long.
It doesn't seem like it was that long ago.
And you've been with your own office, an independent?
For 10 years.
10 years.
Yep.
Yeah. Well, that's crazy.
As time moves too fast.
Yeah, well, No, Brock graduated last year.
I have one in college this year and a junior.
And a junior, that's right. That's what I was trying to remember.
Because ours are the same age. Yep. We have two the same age.
Yep. That's crazy.
Yep.
Cool. Well, thanks for sitting down.